The financial world is undergoing a massive transformation, with open finance emerging as a revolutionary concept that is poised to change how individuals and businesses interact with financial services. Open finance represents an extension of open banking, moving beyond the traditional banking ecosystem to integrate a wider range of financial data, including savings, investments, pensions, mortgages, insurance, and even tax data. This transformation is driven by advancements in financial technology, increasing consumer demand for greater control over financial data, and regulatory initiatives that promote financial transparency and competition. At its core, open finance allows consumers to securely share their financial data with third-party financial service providers through application programming interfaces, APIs. This system enables financial institutions, fintech startups, and even non-financial companies to offer more personalized, efficient, and competitive financial products. The goal is to create an interconnected financial ecosystem where consumers can seamlessly manage their money, make better financial decisions, and access innovative financial services that were previously unavailable to them. Governments and regulatory bodies across the world are playing a crucial role in shaping the open finance landscape. For example, the European Union introduced the Revised Payment Services Directive, PSD2, which mandated banks to provide API access to third-party financial service providers. The United Kingdom is also actively working on open finance regulations, aiming to build upon its already established open banking framework. Meanwhile, Canada, Brazil, and Mexico are in different stages of implementing their own versions of open finance policies. Recognizing the potential of this innovation to enhance financial inclusion and economic growth. While the adoption of open finance is still in its early stages, its impact is expected to be profound, as it paves the way for a more inclusive, competitive, and user-centric financial system. However, with innovation comes challenges, and open finance is no exception. Concerns over data security, privacy risks, and regulatory compliance remain significant obstacles that need to be addressed before open finance can reach its full potential. One of the biggest benefits of open finance is its ability to completely revolutionize personal finance management. Traditionally, consumers have had to manage multiple accounts across different financial institutions, manually tracking their spending, savings, and investments. With open finance, all financial accounts can be integrated into a single dashboard, providing users with a real-time, holistic view of their financial health. This integration enables artificial intelligence, AI-powered financial advisors to analyze spending habits, recommend budgeting strategies, and even suggest investment opportunities based on a user's financial goals. Imagine having a smart assistant that alerts you when you're overspending, automatically transfers excess funds into high-yield savings accounts, and suggests the best mortgage or insurance plan based on your current financial situation. This level of personalization and automation is expected to become the norm in an open finance ecosystem. Beyond individuals, businesses, especially small and medium enterprises, SMEs, are also set to benefit from open finance. For example, by integrating their accounting software with financial service providers, SMEs can automate cash flow forecasting, tax reporting, and expense tracking, reducing administrative burdens and improving financial decision-making. Additionally, open finance is expected to foster greater financial inclusion, particularly in emerging markets where large populations remain unbanked or underbanked. By leveraging alternative credit scoring models, such as analyzing utility payments, rent payments, and other financial behaviors, open finance can help individuals who lack traditional credit histories gain access to loans and financial services. This could be a game changer in regions like Africa, Southeast Asia, and Latin America, where millions of people are excluded from the formal financial system. Another emerging trend within open finance is embedded finance, where non-financial companies integrate financial products directly into their platforms. For example, ride-sharing apps could offer microloans to their drivers based on their earnings data, or e-commerce platforms could provide instant credit to shoppers based on their transaction history. These innovations have the potential to make financial services more accessible and tailored to individual needs. ultimately empowering consumers and businesses alike. However, despite these benefits, widespread adoption of open finance still faces major hurdles, including consumer trust, regulatory challenges, and technological limitations. The biggest challenge facing open finance is the issue of data security and privacy. While the idea of seamlessly sharing financial data between institutions sounds promising, it also opens the door to potential security breaches and identity theft. As financial data becomes more interconnected, the risk of cyber attacks increases, making it crucial for financial institutions and fintech companies to implement robust security measures. Consumers must also be educated about data privacy, ensuring they understand who has access to their financial information and for what purpose. Regulatory frameworks will play a key role in addressing these concerns, but striking a balance between innovation and security remains a complex task. In addition to security risks, regulatory compliance is another major challenge. Different countries have varying levels of openness when it comes to financial data sharing. While Europe and the UK are leading the charge with comprehensive regulatory policies, other regions, such as the United States, have been slower in adopting similar frameworks. Without standardized regulations, financial service providers operating across multiple jurisdictions may face difficulties in ensuring compliance. Furthermore, traditional financial institutions, such as banks and insurance companies, may resist the transition to open finance due to fears of losing market dominance to fintech startups and big tech companies. Banks have long held control over consumer financial data, and open finance threatens to disrupt this monopoly by allowing fintech firms to compete directly with them. To survive in this evolving landscape, banks will need to embrace open finance rather than resist it, collaborating with fintech companies to provide better services for consumers. Another barrier to adoption is consumer awareness and trust. Many people are still unfamiliar with the concept of open finance and may be hesitant to grant third-party providers access to their financial data. Building consumer confidence will require clear regulations, transparency from financial institutions, and user-friendly interfaces that make data sharing simple and secure. Despite these challenges, the future of open finance looks promising. As technology continues to evolve, innovations in blockchain, decentralized finance, DeFi, and AI-driven financial solutions will further enhance the open finance ecosystem. In the coming years, we can expect to see more financial institutions adopting open finance principles, leading to greater financial inclusion, efficiency, and competition in the financial sector. For consumers, this means more control over their financial data, better access to financial services, and the ability to make smarter financial decisions. For businesses, open finance offers new opportunities for innovation, partnerships, and revenue streams. Ultimately, open finance has the potential to reshape the financial industry, creating a more transparent, accessible, and customer-centric financial system for everyone.